One of the areas that you seem to have a fair amount of exposure to is consumer discretionary. That's been a pretty tough place to be in 2014. So talk to us about what you've been seeing there and what's attracted you to that sector.
The reason that I oftentimes own a lot of consumer discretionary, particularly retailers, is that one must remember, first of all, we are a consumption nation. 70% of our GDP is internal consumption. We do have really some great retailers around, and at times their prices get beaten up in the marketplace, and that can come about because gasoline prices go up, or heating prices go up in a cold winter, or we have economic difficulties and unemployment rate goes up. So there are many factors can give people hesitation and cause for concern regarding the sector. I'm, as you suggested, bottom up, so I look for anomalies, companies that appear to be mispriced. Some of these consumer discretionary names that I bought, I thought would do better than they ended up doing. And I didn't see light at the end of the tunnel. I don't pay for expectations. So I sold those at losses, but the remaining names I stress test. I say to myself, well, how bad can this get? And in my valuation technique, in terms of the earnings number, I use the lower of the trailing 12-month earnings or future 12-month if they're lower. Now, in some of these retailers, despite the bearish stance of analysts, most of them had reasonably bullish earnings assumptions. So I said to myself, well, if they're that concerned, these earnings, in my opinion, are too high. And so I take a lower level of earnings and say, would the stock still be attractive at that lower level of earnings? And the answer was yes. My small cap fund, where we have 16 years plus of history here at Royce, has shown its defensive characteristics over that period of time. And I would argue that a large portion of that comes about because of that spread, economic value, the fact that the cap rate, the return to the buyer, is higher than the cost of capital. That means that there's absolute value in this company, not only relative value. A lot of people buy stocks that are inexpensive to the market or inexpensive to peers. That doesn't help much when the market's really in difficult times and sliding rapidly. It's only, in my experience, the ones that have the absolute value that really are selling below their economic worthiness that tend to do better during those market declines. And I would offer as some form of proof our performance in the small cap fund during those difficult periods of time.